Welcome to the Industry Experts Panel at PortfolioWealthGlobal.com. My name is Michelle Holliday. With gold trading at its worst sentiment read since 1990, and the USD having a very strong half to 2018, and the FANG stocks correcting down, those being Facebook, Amazon, Apple, Netflix, and Google, the economic environment is certainly looking very interesting as we enter August, which is typically a rather boring month, but it could be very different this time around. Joining us now is Mr. Mickey Fulp, a certified professional geologist. Mickey is a veteran mining analyst and also a commodities expert. He is also known as the mercenary geologist. Mickey is a very popular guest on many shows because of his wide range of expertise. He has over 35 years of experience as an exploration geologist, working with base and precious metals, as well as industrial minerals, coal, uranium, oil and gas, and water in North and South America, Europe, and Asia. Mickey has worked for junior explorers, major mining companies, private companies, and investors as a consulting economic geologist for over 20 years. And we are thrilled to have him on the show today to lend his expertise on just what is happening in these markets at this very confusing area of time. Mickey, welcome to the show. How are you today?
I'm well, Michelle. Thanks for the kind words.
This is excellent to have you here. Mickey, let's start right off with gold. From your perspective, is this unexpected? What is happening here? Why has the price dropped so low?
Well, it is not unexpected to me. I started talking about this in May when we always talk about sell in May and go away. There's a seasonality to gold, and the summer doldrums this time of year is usually when gold reaches either a seasonal low and at times a one-year low. So that's part of what's going on right now. We are at a 52-week low for gold today. Right now I'm looking at my board, and it's actually gone up about, it's 12.14, but it was down to 12.12 on New York Open today. The other thing is the strong U.S. dollar, and there's usually a strong negative correlation of the dollar and gold, and that has been particularly in effect since the beginning of the year. At least we saw a DXY of below 89. It actually dipped to 88.5 briefly intraday in April, and now this morning we're sitting at about 95. So do the math. U.S. dollar's up about 7% since April, and gold's down a little bit more than that, maybe 9-10%. So a lot of it has to do with strength of U.S. dollar.
Really? So this is not completely unexpected to you?
Not to me. I wrote a piece about 6 weeks ago on the upside of gold, and it was entitled "Why Gold Ain't Going Anywhere Anytime Soon." And you generally don't expect a rally in gold until after Labor Day, and at that point we have some catalysts that should take gold higher a bit anyway, and that would be the Indian festival and wedding seasons when physical demand for gold increases substantially.
Wow, interesting. Now, regarding mining stocks, specifically gold mining stocks, which are basically in a bear market and have been since 2011, they're becoming even worse investments since the launch of the ETFs. From your perspective, who is doing the selling right now at these very cheap prices, sometimes even below the founder share levels? What are your thoughts on this?
Well, there's not a lot of selling. There's not a lot of liquidity. There's very few bids. And so generally when you have a non-liquid with a market with low volumes, and we've seen that since arguably January, prices are going to go down. So there just is not a lot of interest in the gold sector right now, from all the way from the major gold miners down to the companies I play, which are the penny stocks on the Toronto Venture Exchange.
Now that could make it a very interesting purchase for people that like to buy gold. What do you think of it right now?
Well, I think we need to separate, do not conflate gold, buying a physical gold with buying a gold stocks.
Right.
Gold stocks are pure speculation. So I'm actually buying both right now. I'm pecking away when gold goes down. I'm in Vancouver, my office in Vancouver right now, my second residence, and I'm likely to bop down to the Vancouver Currency and Bullion Exchange today and buy an ounce or two of gold. Low. Now, I hoard gold, so I don't look at it as investment or a speculation. It's a safe haven. By the same token, I'm picking away at specific gold stocks. And I like to play the Advanced Explorers on Toronto Venture Exchange. They're on sale right now. Now, I'm not going to tell you they're not going to go lower, but there's some fundamentally strong stocks out there with really good exploration plays. People have done it before, tight share structures, and they're trading at near or at their 52-week lows, even below what they traded last December during tax loss sell season. So that's what I'm doing. But I'm a contrarian, and as Rick Rule's fond of saying, you're either a contrarian or a victim in the stock market, and I'm always a contrarian. Requires patience, though.
Yes, right. But it's an interesting period of time for buyers. Now, Mickey, are you bullish on uranium right now in light of what seems to be the United States security situation? What do you think?
Well, absolutely. And I have to admit, I've been a kind of a permabull on uranium, basically from about a year past the Fukushima event. And geez, that's over 7 years ago. But the supply-demand fundamentals of uranium are compelling. The problem has been the Japanese reactors shut down. 50 reactors shut down after Fukushima, 50 of 54 actually. The Germans shut down some reactors, said they weren't going to use nuclear power anymore, so now they import all their electricity from nuclear power plants in France. That would make a lot of sense. But anyway, we had this demand destruction for quite some time. It's really turned around now. We've seen the uranium price go from a low of $18 in November of 2016, if memory serves. It's just under $26 right now. No one can make money at that price, but it's coming, and it's a very thinly traded market. It's very opaque with spot price and long-term contracts. There is no world market. There is a futures and options market, but it's a minuscule thing. It doesn't really amount to a hill of beans. So based on all this stuff that's going on with the U.S. government getting behind domestic uranium production, it's coming. I can't tell you exactly when it's coming, but it's a good time to be a contrarian uranium patch too.
Nice. Now, as an exploration geologist, you have explored all over the world. From your perspective, how hard is it to discover gold?
It's damn hard. You know, most of these projects fail. From a prospect stage, from an outcrop discovery to making a mine, probably one in 1,000 actually will make a mine. But if you're a good geologist and you keep pecking away at it, you're going to have some success. I had some success early on in my career with finding gold deposits. It's one of these things. It's a needle in a haystack, but the best of the best find gold deposits. You know, there's a demand for gold deposits. There's a demand for gold mines. Last year in 2017, the world produced more gold than it's ever produced before. So there has been some success, and there will always be success.
There's been predictions that we're really close to the top of it, then it's going to start to decline. What do you think of those?
No, I think that's probably right. But people that call that peak gold, I think that's a misnomer. In my opinion, it will be a temporary peak. And the reason is we've been in a bear market since, let's do the math, about 5 of the last 7 years. We had a little run up in 2016. It continued for about half of 2017. But a bear market for gold means exploration dollars in the ground go down. And if you're not exploring, you're not finding. So, and that's a cycle that's probably 5+ years behind the production. So I expect gold production to go down in the short term, but this idea of peak gold, I think, is ludicrous. It's much like what people said, come up to me and argued with me in 2011 about peak oil and that the world would never produce any more oil. Look what's happened. You know, the U.S. Is producing an all-time high right now.
Yeah, it's really taking off. Now, Mickey, shifting gears just a little bit, do you believe that Bitcoin is favored by safe haven investors, or do you see the blockchain as helping to bring transparency to gold price leveraging in paper contracts in New York and London?
Well, I'm no expert on Bitcoin. To me, it's not money. It's a financial speculation. I do not consider anything that requires an internet connection to be fungible as money. To me, gold is real money. On the other hand, the blockchain has lots of applications, and it certainly has applications to the gold industry. And so the basic technology behind Bitcoin and other what Kerry Lutz calls kleptocurrencies, and I tend to agree with that. The blockchain is certainly a technology that will come into more use and into the forefront going forward.
Now, Mickey, will higher interest rates and higher inflation rates impact precious metal prices?
Well, generally when we see higher inflation rates, we'll see higher gold prices. On the other hand, when you raise interest rates, because gold does not generate interest, that's negative for the gold price. So it's a bit of tit for tat, one tugging against the other. All in all, I'd have to say in the short, mid, and long terms, I'm bullish on gold. I think, with the U.S., what's the debt now? 21 trillion, something like that. We're a house of cards waiting to fall. We are the world's reserve currency. We are the 800-pound gorilla on the block in terms of economic power in the world. That's the reason Trump can get away in the bully pulpit with these trade tariffs right now, because U.S. is still basically, I mean, it's been said many times, when the U.S. economy sneezes, the rest of the world catches a cold, and I think that's still in play.
Now, Mickey, will a stock market top and crash, whenever that does happen, impact gold stocks directly? And if so, in which direction?
Well, most certainly. A lot of people will say, oh, you want to own gold stocks as protection against a stock market calamity or financial collapse or even a recession. And that's just fallacy. It does not work that way. You cannot conflate gold stocks, which are just a piece of paper, a speculation in the stock market, with owning of physical gold. And that's what I do. I don't own paper gold. I don't own an ETF. I have physical gold in my physical possession. So that's my financial insurance. That's my safe haven against financial calamity. And that's my gold holdings when I leave this world and pass it on to my heirs. They're going to be well taken care of for the future.
But own the physical stuff, not the paper contracts.
Exactly. The reason to own gold is there's no third-party risk. If you own an ETF, or even if you store your gold in a vault someplace in overseas or whatever you choose to do, you've introduced third-party risk, which in my opinion defeats the reason to own gold, or one of the reasons to own gold.
Right. Now, you touched on geopolitics just a little bit earlier. And geopolitically speaking, there's been a lot of speculation concerning the tough talks and negotiations taking place right now on the world stage. In your opinion, what impact might that have on the United States, economically speaking? What are your thoughts?
Well, I'm a supporter of what Trump's doing. I think what when it's all said and done, we'll see how this turns out. He may become known as the great negotiator, much like Reagan was the great communicator. To me, everything he does is based on business. He's making a business deal. So if you've ever read his book, The Art of the Deal, he's pretty tough and pretty successful in what he does. So I look at his boisterous talk, and at times, he's bellicose, and there's probably a couple of other B's that I can come up with there. But it's all negotiation. So certainly it's aimed at China. It's aimed at intellectual property theft. But there has not been a level playing field in world trade for decades now, and hopefully we're going to change that around. There may be some short-term pain for some long-term gain there, but you probably noticed I kind of look at I'm a bit of a glass half full sort of guy that comes from being an exploration geologist. You have to be a bit of an eternal optimist because in geology, and you touched on that when you asked me how hard it is to find a gold deposit. You've got to be an optimist, so because your chances of success are so low. And notice I actually said that in a rather optimistic way. If I was a pessimist, I would have said your chances of failure are very high.
But you gotta believe that it's there. Your thoughts create your whole experience many times.
Well, you just got to look over the next hill, if you're a geologist and you go, well, it's not here, but there's that mountain over there. I need to climb up and see what's on the other side.
I know it's somewhere. Mickey, this has been an amazing interview. How can everybody follow your work?
I run a website, mercenarygeologist.com. I'm a speaker, analyst, writer, talking head. I run a free subscription service, so go to my website and you'll see my mugshot and click right below that, and you'll get all my products, including my stock picks. If you're not a free subscriber, you don't get my stock picks. The other way to get a hold of me is through Twitter @MercenaryGeo. We have 53,000 Twitter followers, and we're quite active in that venue.
Wonderful. Mickey, thank you so much for taking the time to join us today.
Thanks a lot, Michelle. It's been my pleasure.
Mr. Mickey Fulp, the mercenary geologist. For the Industry Experts Panel, I'm Michelle Holliday at PortfolioWealthGlobal.com.